How's it going, traders? Hope all is well. This is your weekly prep for September 8th to September 12th for SPY and the stock market, the S&P 500 ETF, SPY and the stock market. Before we jump into the charts, before we dissect the technicals, and I provide you the levels, the key levels, let's take a look at what we have ahead of us on the schedule. So this week, last week we had a jam-packed week. This week we have a jam-packed week as well. And next week we know the stage is set for the Fed. And just a couple of moments here, we'll take a look at the odds, the betting odds on rate cuts for September, for December, and for the rest of the year as well. So this week, to kick things off, on Monday we have consumer credit. That's a yellow folder event, not too big of a catalyst. On Wednesday we have core CPI, core PPI, and on Thursday we have core CPI. So we have the CPI, we have the PPI data, and on Friday we have the consumer sentiment and the consumer inflation expectations data as well. So the three major days that we can see potential big moves are on Wednesday, right? Wednesday, Thursday, and Friday. So CPI, PPI, CPI, and consumer expectations and consumer sentiment as well. So let's jump right into the technical. So SPY. So SPY made an all-time high once again. When we take a look at SPY on the yearly time frame, we can clearly see that the bulls are in charge, buyers are in charge, and this is the third consecutive year of us pushing to the upside. So there's that 2025 candle. We're above 2024's levels. So as of now, we're in this massive bull market 3-year rally. We did pull back in April, of course. We did dip into that bear market territory briefly for a couple of days. The dip did get bought back up, and now we're pushing all the way back to the upside. We'll take a look at the quarterly. We know this is the last quarter of the month. We have about 23 days left in that quarter, and this quarterly candle is as strong as can be. It's going to close above the previous quarter's Q2's highs, and then now when the Q4 kicks off, where are we going to open up in relation to this Q3 candle? That'll be really interesting. If we take out that Q3 candle's high, anytime we take out that Q3 candle's high, that's automatically an all-time high. That sets the stage for us to continue to push higher. We'll take a look at the monthly. Look at this, guys. Monthly. Look at SPY. After April, SPY has been on a 1, 2, 3, 4, 5-month rally. 5-month rally. Of course, this monthly candle is still young. Has 23 days left in it, so 23 days left of data. We do have the Fed's interest rate decision looming as well. That can highly impact this candle. But as of now, 1, 2, 3, 4, 5 consecutive months of buying on the S&P, which suggests a ton of strength, suggests that the bulls are in full control. Let's drop down to the weekly. We'll take a look at the weekly candle here. We know the weekly candle is composed of the 5 daily candles. We can see last week was very interesting. We did break below last week's candle's lows. We were bearish temporarily, only to come into this 9 EMA on the weekly and bounce off that 9 EMA on the weekly. So when we rewind the clock, when was the last time we came to that 9 on the weekly? Right? Anytime we come to that 9 on the weekly, guys, look at this. Buyer stepping aggressively and flip the weekly candle. We saw it here. Those are our 2 prior engagements at that weekly 9. Look at that reaction. We had an identical response engulfing candle. What's the difference? Both of them were into all-time highs. So when we take a look at it on that weekly, in this case here, we were looking to push into all-time highs. We pulled back into that 9. We came close to touching it. We blasted into all-time highs. This time around, we were closer to all-time highs. Previously, we've been making in this previous example, but what we can see is, again, we push right into all-time highs once we come with that weekly for that test. So the weekly candle was very strong outside of Friday, was very strong, and we did close 3 up on that weekly candle. We just failed to hold enforcement. So going into this week, this is the game plan. Going into this week, whichever side of this candle we take out. So write down these levels are going to be critical. Whichever side of this candle we take out first will suggest we're going to either continue in that direction, okay, or we're going to start reversing away from that. We're going to start reversing this candle's move. So the critical level is 634.82. 634.82. That's that weekly level you want to pay attention to the downside, and that weekly level you want to pay attention to the upside is 652.21. 652.21. So those 2 levels tell us everything we need to know. If we get above the 652.21, that means we're making new all-time highs. We continue this all-time high streak for the past 1, 2, 3, 4 consecutive weeks. We continue to keep that streak to the upside. If we break below these lows, 684, 634.82, 634.82. If we break below these lows, that will mean we will go 3-2 reversal to the downside. But we got to be cautious because that could be a dip buy off of that 9 EMA. So if we can close below that 9 EMA, get below that 634.82, that means the selling pressure is pushing price back below last week's lows, and we could potentially see a temporary pullback. So the main thing is, okay, this is what the bulls need to do. What the bulls need to do is they need to take out that 652.20 and keep price above the 50% retrace of the week. The bears, what they need to do is they need to try to slide price below 634.82 and keep it below the 50% retrace of the week, or the bears need to keep this weekly candle inside. If they can keep it inside, if we can accumulate, they have a chance going into next week, which is the week of the interest rate decision. That's the best bet for the bears, right? So that's the best bet for the bears. See if they can take advantage of that momentum, push it to the downside. So that critical level is going to be that 634.82. So mark that on your charts. Now, when we drop down to the daily time frame, we can clearly see we continuously touch this 20 EMA. We continuously touch this 20 EMA. We bounced. The last time we did touch this 20 EMA, we took a nice 94% trade off of this. With the I provided that idea to the group, and of course this idea right here was for the taking last week. I just didn't pull the trigger there, but the idea was provided for the group as well. Nice swing trade opportunity there, and now we're coming back at that 20, right? 642.02. We're going to test that 20 EMA on the daily. So that 20 EMA test is becoming more frequent. What that means is price is starting to slow down, right? If we can see here, look how infrequent the 20 EMA test was ever since we reclaimed that 200 EMA on the daily time frame. We had one test. From this one test, it took us about from May all the way to June. It took us about a month, give or take. It took us about a month to come and retest it. Right? So we retest that 20, we bounce. Nice parabolic move to the upside, all-time highs. From June all the way to August, we don't revisit that 20. Right? So the first three interactions, there was a pretty significant space in time between the 20 EMA retest. I only highlight that to show you now how the frequency is increasing, which tells us that we're starting to lose a little bit of momentum. It doesn't mean that we can't continue to push higher, but it means these tests are becoming more frequent. We can see in the last two instances here, right? So from August to August, we had two tests of that 20, and the last test was in September. So it looks like we're going to get another test potential here as well, that 20 EMA. So what I'm going to do here is if I'm looking to take any swing trades with contracts at least a month out, I need price to come and test that 50. That's going to be that best opportunity. We have not yet tested that 50 EMA on SPY. So set your alert for that 50 EMA. We have not tested it yet. So if we're going to get a pretty significant move, I might be tied to this 50 EMA test at some point in time. Is that coming this week? We never know. But I do want to bring that to your attention. We have not tested that yet. So there might be a pretty significant reaction that does come off of that level, and the risk reward might be worth it. Once we do come into it, once we see some bullish candles in that territory, we can take that to the upside. But as far as the daily candle is concerned, we closed pretty, after making all-time highs, pretty bearish candle on the daily. Let's drop down to the intraday from all my intraday traders. We can clearly see SPYs trading in this channel, right? We're trading in this channel, this bullish channel, resistance to resistance, support to support. We had first touch resistance there. Another thing I want to bring to your attention, every time we make all-time highs, it turns to a liquidity grab. We make all-time highs here, we grab those highs. We've been seeing this pattern for quite some time. We grab those highs, we dump. Case in point 1. We grab those highs, we dump. This is into all-time highs. Case in point 3. We grab those highs, takes us a couple of days, we dump. Okay, case in point 4, which we're kind of living right now. We grab those highs, and we are dumping currently. The question now becomes, how much of a dump do we see? Right, how much of a dump do we see? Let's measure the last 3 dumps. The last 3 dumps we saw after the grab, this dump led to about a 22-point slide to the downside. This dump led to about, from high to low, a 13-point dump. This dump led to about 14-point dump, and this dump currently we're at 8 points. If we say, hey, you know what, can we get to 14 points? That puts us right at that support of this trend line. That puts us at that right at that support of that trend line. So if you're playing this channel, let support be support, let resistance be resistance until proven otherwise. What that means is anytime we come into the resistance of this channel, we're making all-time highs. So for us to make all-time highs once again, you might want to wait for that occurrence and see if that pattern continues. Of course, use confirmation. This is by no means financial advice. Just bringing an idea to you, right? Sharing an idea here. So you might want to pay attention to see what takes place there as we push back, when we do push back into that resistance here. Outside of that, we are looking to test that 200 on the daily. That might come into play on Monday's intraday action. Question becomes, can the buyer step in and protect that 200 on the daily? If they fail to protect that 200 on the daily, we're going to continue that trend where we pull back 13, 14 points. We can't end our way into this support of this channel. So unless this channel is disrupted, we're going to continue to probably travel in this channel, support be support, resistance be resistance, and continue our grind higher. If we do pull back, I do have a nice pullback territory where I do want to engage for potential swings between, write this down, between 632.87, 634.90. 632.87, 634.90. That lines up with a 3% pullback. That closely lines up with 3% pullback. In that case, what I'm looking for is for us to dump somehow, some way. Support fails, we come into it here, and then we start bouncing back the upside. If that can take place, I get the right price action combination in this territory. Buyer starts stepping in. We use our technical analysis. We do our due diligence. I will take this to the upside, and the idea will be provided when I do take it for the folks in the community. All right. So again, pay attention to those levels on SPY. We're still bullish on the higher time frames. Lower time frames, we're seeing a little pullback on the hourly, especially for my intraday traders. Pay attention, close attention to that 200 EMA on the hourly. If that holds through this week, we'll see. We know we have CPI, we have PPI that can really propel us in either way or pull us one way and take us the other way. So we have to really see what does take place when everything does play out. And this is the week. This is the calm before the storm type of week, even though we have CPI and PPI, because next week the stage is set for Powell. The stage is set for Powell. He's going to take the stage and make the decision. Let's take a look at the betting odds here. So September, there's an 87% chance that they're going to cut rates by 25 basis points, right? This is the betting markets. We follow the money. 87% chance that's basically sealed. Unless this thing drops below 50, below 60, there's a good chance we're going to cut those rates. When we kind of look ahead at September, right? September, there's a 61% chance that we're going to cut the rates in December. When we take a look at December, there's another 61% chance we're going to cut, 32% chance that rates are going to remain the same. So what that essentially means is, as of now, there's a 93% chance that we're either going to cut by 25 basis points or keep rates where they are. And that's going to be heavily predicated on what takes place during next week's meeting. When we take a look at the for the next three meetings, the odds, right? So we have the cut, that's 39%. So we cut this meeting, we cut the next meeting, we cut during the last meeting. So 3 cuts, 39%. Cut, pause, cut. So cut in September. The next meeting, pause, and then a cut. That's 28%. Cut, pause, 20%. Cut, pause, 12%. And pause, cut, 1%. And pause, cut, 1% as well. So we can see off all this data, the chances of us pausing for this particular meeting are very low. 1% chance here, 1% chance there. And of course, no change, 3% chance here. So there's a good chance that we are going to cut by 25 basis points. That's what the market expects. It's going to try to price it in, and we'll see what takes place from here. Again, guys, thank you for tuning in. We'll continue to provide these videos on the weekly. I try to keep it as value-packed as possible. I try to keep it as short as possible, give you all the bigger picture levels, all the intraday levels, and everything you need to equip you to make better decisions throughout the week. Again, guys, make sure to tune into our live trading show. We go live every single day at 9 a.m. with the most comprehensive pre-market program followed by live trading. So we do this every single day. If you haven't already, make sure to subscribe, make sure to share. We'll see you guys next week, and make sure to tune into the live trading program as well. God bless each one of you. Have a great week, and we'll see you next week for the recap.